wanted to get right into this. VIX has been a little sticky high this week compared to times in the past. And one reason why implied correlation is still pretty high, but those are off the boil compared to realized. Realized correlations still pushing higher, approaching 70. What do you make of that kind of discrepancy of fading the move we're seeing in realized?
Well, first, just for the benefit of the viewers, I think it's interesting to talk about what is realized correlation. And I think it's super interesting that realized correlation has been higher over the past month or so compared to October of 2018 or other kind of high vol periods we've had over the past couple of years. So what is realized correlation? It's basically a measure of how closely stocks are moving with each other. So let's say if all the sectors in the S&P are moving, let's say they've all sold off together or all rallied together, then we'd say realized correlation is high. And I think it's super interesting that although volatility itself of the index is not that high, the swings are not quite as high as they were, say, in Q4 of last year. The correlation is a lot higher. So we're definitely seeing a lot less differentiation between stocks and a lot more of just stocks moving together. To answer your question, I think it's pretty typical that the options market will not necessarily always price things the same as what has already happened. So, we had a couple of 3% down days over the past couple weeks. I think starting in August when Trump kind of announced new tariffs and kind of a little bit after that. But the options market is basically pricing in that, hey, that kind of stuff is already sort of behind us. We're not necessarily expecting that much more, stocks moving together going forward.
And then in terms of event risk, you've been looking a lot at EFA, essentially the volatility calendar. That's the DM equities, essentially ex-US in Canada, and how they're pricing both Brexit and how they're not pricing the ECB meeting that's coming up in September. Can you walk us through that a little bit?
Yeah, I think the Brexit one is the most interesting. So if you look at options on the British pound, for instance, they're basically pricing in a really big event premium around the Brexit deadline, October 31st. But if you look at equities, so I looked at EFA, which tracks mostly European and some Japanese stocks. There's a decent amount of UK stocks in there as well. There really isn't too much event premium priced in there for that deadline. I think that equity and FX discrepancy is partly due to the kind of effect you saw back in 2016, where the pound sold off a lot and British equities kind of rallied to offset that. But I think if you did have a hard Brexit deadline, then if you did have a hard Brexit, then you would see both equities and the FX sell off together.